Okay, I'm live. Uh, also live. Has something in my ear, my AirPods, but I don't want to take the time to stop that. So I want to do a quick video on cash flow and secrets, right? And I want to give you all this overview, or let me take this out because it's kind of bothering me. I left my YouTube going in. But I also want to educate you all. And let me hook up my mic on Facebook. Give me 1 second. All right, so Facebook can help out some. So I want to educate you all on what's really stealing your money, what's really stealing your wealth. Hello, Brandon, always the first in. Let me know if you can hear me, Brandon from Raleigh, North Carolina. Always the first in. You will know that on yesterday. And Facebook, let me know if you can hear me as well. Um, on yesterday, it was released by the news articles that we are, or by the media. Hello, Antonio, that we are officially in a recession. Hello, Indiola. Indiola says you're in the house. You all are still in quarantine. But let's make some money while you're in the house. Hello, hello, hello. Mike on Facebook showing some digital love. uh, Mike got the hello, 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 and everything in there. So you all like when I say that? When I come on my videos, let me share this on my Facebook page. So let me get right into it. Oh my God, you all are asking me about FICO 10. I have my gym clothes on. This is going to be a 10-15 minute video. But hey, I will answer some questions about FICO 10 if that's what you all want me to do. But let me explain cash flow also, right? Incorporation, LLC. Hello, Hickory, North Carolina, right? That's always the question. Or sole proprietor. So hang on to the end. I see your, thank you, Mike, sound loud and clear. I see your FICO 10 question. I will answer that. And it looks a little dark in here. So let me get to the title of this. Let me open my blinds. Just a little bit to get some lighting in the room. Let me change this mic. So this is what I want you all to know about having a home-based business and really what cash flow is. People, believe it or not, cash flow is not just getting a monthly or weekly or bi-weekly paycheck. And that means how much cash that you have flowing in versus budgeting of how much cash flowing out. So tonight, I'm going to teach you all what cash flow is, right? And I may get into that a little bit in this video because, again, I am headed to the gym. I had that scheduled for 8 o'clock Central Standard Time, but I may get into cash flow just a little bit before I end the video. But right now, I want to get into what's eating up your paycheck, right? And why you don't have cash flow. How about that? So you all give me the thumbs up, like and share if you want me to share this. What's taking away your, and I know you think your budget, right? Maybe if I have a cheaper cell phone plan, or if I cut the cable, if I didn't dine out as much. Well, you've done all of that during this crisis, right? During this health pandemic. You haven't been able to eat restaurants. You haven't been able to travel. You haven't had time to spend money on spring break, vacation, right? And yet your cash flow is still been taken away. Some people are still living paycheck to paycheck, and some people are still living paycheck to Monday. So what does paycheck to Monday mean? Well, paycheck to Monday means I get paid Friday. I have to use my paycheck to pay past due bills that I didn't pay from last month's check. And so I have to catch up on past due bills, and I go out and buy me something to drink maybe for the weekend. do something recreational because I worked hard all day long, right? Or all week long, all month long. And by Monday, I'm broke, right? So we have some people that's living paycheck to paycheck, and then others that's living paycheck to Monday. Hello, Antonio, and hello, Rico. Rico, I did see your text message. I just haven't had the time to respond. And I want to say this now. When you're sending text messages and everything, people try to limit them to 2 to 3 lines per text. That way I can read it quickly. Believe it or not, I have 51 text messages I have not read up to date. There are a lot of people text me, whether it's for the home-based business or for credit repair, on a daily basis. And the shorter your text messages are, the quicker I can respond to you. The longer they are, they get pushed back to at the bottom of my respond list. So just keep this in mind when dealing with business as much as you can. When sending emails and text messages, I always try to send 2 to 3 lines, right? Because text messages and emails are for information and not conversation at that point, right? So try to make your text messages and email 2 to 3 lines, 2 to 3 sentences. And then once you become a client and we have to have conversations on the phone, believe me, I will pick up the phone and call you, right? But try to keep that 2 to 3 lines and you will be on the quicker to respond list. So let's talk about what's really eating up your paycheck, where you live in paycheck to paycheck or paycheck to Monday check, right? What's really eating up your paycheck? Number 1 is taxes. Number 2 is inflation. Number 3 is debt. And number 4, a low financial IQ. Now, when I get into number 1, taxes, if you look at your check stub, what you will know is that 6.2% of every paycheck is taken out in taxes to the government. So when you ask, or when I ask people, what's your biggest expense, before they can create a budget, you have to recognize your biggest expense, right? And this is why I don't like just budgeting classes that don't help you reduce your biggest expense. Your biggest expense is that 6.2% of taxes that's being taken out of your paycheck. Now, we have other taxes like property taxes, sales taxes, et cetera, but this is the portion that you fill out when you get a job, right? And I call it your W-4 wealth strategy. And you actually tell and control the government how much to take out of your taxes. Okay, then you have inflation. We're seeing inflation every day. We're seeing deflation when gas prices would drop. Now we're seeing inflation because gas prices are steadily rising or they're on the uprise. And now you see prices spikes in groceries, right? Your everyday groceries, the prices are doubling, sometimes tripling on everyday grocery items. And throughout the summer, the gas and groceries will continue to increase. So with your kids being out of school, your children being out of school, or just feeding yourself, right, then you're seeing these prices, and this is eating away at your paycheck. So the very first thing that the home-based business, and I have my 2 Kings chapter 4 scripture on my whiteboard. Turn your house into a home-based business and teach your children entrepreneurship. That's the whole context of that scripture in 2 Kings chapter 4 of the widow woman, that when her husband died, her children were about to be sold because of bad debt into slavery, but she used credit. And that's why I tell people there's a difference between credit and debt. Debt is your number 3 expenses. If you're not out of bad debt or you're not out of debt, you cannot use your credit to invest. So if you're watching this and you're able to type, I want you to put this in the comments. If you are not out of debt, because people don't understand the difference. If you're not out of debt, you can't use your credit to invest. You can't use your credit to invest, right? Or you shouldn't be using your credit to invest, or you shouldn't be using other people's money. You can't use the bank's money to invest. You can't use other people's money when you're flipping houses, or you flipping stocks, or you trading stocks, or you trading on the forex, or whatever you're doing. If you have debt that's eating away your income or your money or your paycheck, then you won't position yourself properly to use your credit to invest in those vehicles. Now, I don't teach trading stocks. I don't teach forex. I don't teach real estate, right? But I highly recommend that you use credit to invest so you can get more cash flow in your life. You can't, it's kind of hard for me, use credit to invest. The best type of investment you should do is using the bank's money or other people's money, OPM, or somebody else's money, right? So this all goes into, where's your cash flowing? Again, cash flow is just not money coming into you. It's just not I made profit off forex today. I made capital gains off day trading in stocks. That's not cash flow. It's capital gains, but it's not cash flow. So now you have to recognize what's eating up my cash flow: taxes, inflation, and debt. And then the fourth one, you may have a low financial education or low financial IQ, right? So, and YouTube, make sure you share this. Facebook, share this as well. So, what do you do if you want to create more cash flow? You create a home-based business to create more cash flow. You use sole proprietorship, right? Let me make sure I'm spelling this right. Proprietorship. And you convert your social security number into entrepreneurship. Entrepreneurship. And you do this through a home-based business, right? You do this through a home-based business. And now you can get to the point where you're using credit to invest. Where you're using credit to invest, not your bank, not your money, right? I often show people all the time. I always convert my credit cards out for 0% into cash. And this is the money I use for my credit cards to invest. So this is what eating up your cash flow from your paycheck. This is how you get the money back, right? And again, credit and debt is not the same thing. Now, for example, let's say you are a high income earner and you're paying about $2,000 of your mortgage. Rent might be increasing to $2,000 soon. I don't know, in some places. But let's say you have a $2,000 mortgage, for example, right? You add a home office within your home-based business, and a home office is calculated by 20% of the living space required. 20% living space. So in this scenario, if you were paying a $2,000 mortgage, you'll have $400 in taxes saved per month. $400 in taxes every month. Right, Jesus? Leverage cards. Jesus is on from California. Hello, my friend. So $400 a month, and then you do that times 12 months. And that's $4,800 a year that you get back. See, this is what cash flow is all about. This is what you don't learn in schools. It's what they don't teach you. And I'm going to get on FICO 10. I'm going to answer FICO 10 questions, but let me finish and teach this out. So $4,800 back for paying a mortgage that you would have paid anyway. But now you have a home office. Money that otherwise you just would have spent into paying a mortgage. Utilities, right? Utilities. Let's say you have lawn service, sprinklers. And even if you have a rent apartment or condo, you still can use that living space as tax deductible, 20% if you use for a home-based business. So even if you're paying $1,500 a month for rent, right, still tax deductible. So you don't have to have a house, right? But so lawn service, sprinklers, your water, your maintenance, all of this tax deductible. Maintenance. So I don't feel like writing all that. So this is how tax deductible. So let's say that this is $200 a month, which is $1,200 a year. See, this is how to make cash flow back to you. This is the real definition of cash flow. This is how to make cash flow back to you. And I'm gonna show you, I'm kind of getting into what I was gonna teach tonight, but that's okay. So mileage, how to make cash flow back to you, right? How to make it come back to you. Your mileage on your vehicles through a home-based business. Let's say you do 700 miles per year. Now that's the low end. That's real moderate and considerate. That's $400 a month. All right, which is again $400 a month, $4,800 a year. See, this is the secrets to cash flow. This is how I make money and cash flow back to you people. If you're not connected with me in this home-based business, this is just outgoing expenses and not incoming deductions. You can find all of this on the IRS publication form 15. Right. This is what cash flow is. And but this is the big one. This is the one I really love. Because just 4 years ago, again, IRS publication 15 stated that you can hire your kids to work in your home-based business, right? Just 4 years ago, it was $6,000 per child. They changed it. Now, you can say what you want to about President Trump, but he is for business owners. And he changed it when he got into office to now, check this out, up to $12,000. $12,000 back per child, ages 7 to 17. And even if your child is under the age of 7, you still can pay them to work in your home-based business, even as an infant. But you all know that? Even your infant child. And that's done. You have to get the right tax specialist. But let's say your home-based business, you want to pay your child, your infant child, as a model. You take pictures of them, put them on your website for your home-based business, right? This can be done in the home-based business. $12,000 per child, ages 7 to 17, right? And or for your spouse, your wife, or your husband to work in your home-based business. So this is what we call people income shifting. This is $1,000 a month. $1,000 per month. This is called income shifting. And then you have something, if your income status is high enough, that you can rent or lease out your house. It's called the Augusta rule through a home-based business. And the Augusta rule allows some portion of your home, when you're using it for home-based business purposes, for you to lease or rent out and rent payments and to get a larger sum of your mortgage back. But again, a tax professional will go more into debt with that. The Augusta rule was developed out of Georgia during their golfing tournament, as Augusta golf tournaments that would happen during those tournaments, and the rich and wealthy would rent and lease out their homes to people who want to be a part of that golf tournament. And with you having events and things like that, that happens, right? As a part, and this is usually for high income earners, not that strategy, the Augusta rule, but everything else, without you being a high income, 6-figure income earner, right? Then you can apply to you. You can apply to you. So debt and credit is not the same thing. So your everyday expenses now become tax deduction. That's how you make money flow back to you, people. This is how you make money flow back to you. This is the real cash flow secrets. There are people who get as much as I'm trying to adjust my lighting. Let's see which one I like. $200 to $600 more. My lighting was dark today. I don't know why. $200 to $600 more out of their paycheck. And if people had just $200 to $600 more, they won't have to file for bankruptcy. They can make it further along in their paycheck, right? They can get the extra money they need to invest. And they don't have to play the casino type mentality where I'm just going to invest my paycheck and hope I don't lose on this stock or on this forex trade, right? Or I hope that I get I don't know if I don't have a tenant, would that eat away my paycheck? Will I be able to maintain the house? This is how you get that money flowing back to you. So even if you are playing golf, right, you're golfing with friends and going out doing recreational things, you talk to them, discuss the home-based business. You may furnish some things to go golfing. You may buy, I hang around golf friends, and I'm really going to show you this video. You might buy the cigars, and you might buy whatever the refreshment drinks you all would drink. All of that can become a tax deduction, discussing the home-based business on the golf course. Your marketing that you do. It used to be under the category of meals and entertainment. Now it's called marketing. Whatever marketing you spend, whether you're setting a website, whether you're paying for a website, even the money that you spend to be enrolled in a home-based business is tax deductible. And my home-based business that you can partnership with me with, we analyze your paycheck or even your client's paycheck so you can bring more money home every paycheck, because now you have over 475 tax deductions to claim. So now you can get less taxes taken out of your paycheck, because as an employee, you only have 9 tax deductions. So you have less tax deductions, you get taken out more taxes. All right, you get more tax deductions, you're taking out less taxes, which means that money is flowing back to you. You get that money to flow back to you, flow back into your household, so you can get in a position to pay down bad debts. So you can have a savings. 1 out of 4 Americans did not have $400 saved in their checking account for emergency funds, right? So vacations, right? Instead of taking vacations or family vacations, you discuss the home-based business, and these vacations now are tax deductible. Thank you, Kendra Finch, on my YouTube channel for that $25 super chat. Thank you, Queen. I appreciate you for supporting the channel. Thank you so much. K-Love, beautiful profile picture. I was going to ask the Queen about membership and tax deduction. So even your membership in the home-based business is tax deductible. Right. It's paycations. Stop taking vacations and start taking paycations. And you probably want to ask the questions, well, what type of things can I hire my children ages 7 to 17 to do in the business? They're very technological savvy. I would like some people to hire them to just email me their credit reports, because some people have difficulty with technology and emailing me their credit report because they want credit audits. They can help you do the filing. They can help you clean your office space, right? And what happens when you pay your children, things that would have been an expense to you becomes a tax deductions. Now that you're paying them, and the men usually like this, I'm already getting some digital hearts on Facebook, you reversing their child support to pay working with you in the business, and you're teaching your children entrepreneurship, right? You're also whatever money you pay them, and it has to be set up the correct way, meaning they have to have a 1099, ages 7 to 17, you can deposit to their checking account. Um, Now they can go, or you can go with them because they're still, teenagers. They're not in that adult, 18 years or older, and now you can go with them and have control over how they spend their money. So if they're in some type of sports club, right? Instead of their money coming directly out of your pockets or your bank account, it goes out of their expenses that you're paying them in home-based business, and now it's a tax deductible up to $12,000. School clothes, right? Groceries are big things. Groceries right now, big things. Now they can go, you can use their card, they can make their own groceries, and you get to $12,000 at the end of the year. Your internet that they're using now to work and do their class work from home, tax write-off. If you don't have a home-based business, it's now an expense, and the money won't flow back to you. Jesus said, I heard a home-based business allow you to write off a percentage of housekeeping. Yes, but if I had children, because that is home maintenance for your building and things like that. If you don't have children, maybe you want to allocate those duties to your spouse who does the domestic affairs, because you can also $12,000 of your spouse is also tax deductible in home-based business. But anything that's house maintenance. So if you don't have a spouse, you don't have children within that age range, maybe your children are older, right? Then anything that's home maintenance for the upkeep of your business through a home-based business, yes, a certain percentage of it is tax deductible. More so the 20% of the office space that you're using in a home-based business, Jesus. All right. So FICO 10, I'm going to the gym. I will discuss cash flow later on tonight. You don't want to miss it. I'm planning on being live at 8 o'clock Central Standard Time, but that only gives me about 3.5 hours. So look for me between 8 and 9 o'clock. I'm going to discuss cash flow like you never heard it before. Cash flow is not the amount of money coming in minus your expenses. That's a budget. That's a budget. I'm going to tell you this, and I'm going to demonstrate it tonight. Cash flow is anything that put money into your pockets, right? That's cash flow. Expenses is anything that take money out of your pockets. So that's a simple definition for cash flow. All right, FICO 10 question, and let me log out. How does FICO 10 change the rules for all of us trying to fix our credit? That's a great question, because I just got informed today, as these updates with FICO 10 are occurring, that FHA loans, right, now are accounting all of your medical collections reporting on your credit report, all of your non-medical collections reporting on your credit report. They are now FHA, that's Fannie Mae and Freddie Mac. If you want to be a home buyer, they are now calculating all of that into your qualifications to be a home buyer. In the past, on the FICO 8 and FICO 9, it was not calculated in. So those are just some changes about FICO 10, right? Those are just some changes about FICO 10. So now what I would do is helping people improve their credit is just the accounts that's factoring in the last 2 years is what we focus on, because at this point, those were the only accounts that FHA, right, and FICO, Fair Isaac Corporation, was calculating in to approve you or to not approve you, or to deem you credit worthiness or not credit worthiness. Now, no matter if the collections are older than 2 years, even if they pass the statute of limitations, if they're still being reported on your credit report and it shows that you have a monthly payment, that is being calculated into your FICO 10. And FICO 10 is already here. It's already here because the algorithm has already changed. I logged into my Experian account 3 days ago. my credit score had increased by 18 points. I can show you all. Let me log in. And it's because it's already calculated in my debt to income ratio. So in the past, even if you had a collection account reporting, and again, this is medical, this is a regular debt collector, the balance on it or the monthly payment on it would not be calculated in against you for, let's say, home approval. But now, if it's showing that this person is supposed to pay $100 a month um, towards this debt collection account, then they're going to account that, for example, as $100 of your outgoing expenses that should be paid toward those debt collectors, right? Let me click on maybe later. So this is just because, as you can see on Experian, they've already changed, and Facebook, you all can't see this, but I'm showing this on my YouTube channel, my 806 credit score. They've already changed the vocabulary or the language to credit and finances, right? Because now it's calculating your debt, your total debt. And so I tell people all the time, it is best to look at a credit profile versus a credit score. Now, am I happy to be in the 800 club? I am. But I also know that my total debt is going to increase from $42,532 because I'm going to use my credit. I'm going to use the bank's money, right, to invest in assets. That's cash flowing me. One of the assets that I invest in is my home-based business. And so it's my initials, LD. I don't want anybody to think that I'm using somebody else, but I don't want my, address and everything else showing. So basically the changes are they're looking at even older collections versus where they were now if you're trying to get approved for FHA loan. So FICO 10 is already here. So even now older accounts are going to be calculated, the older collections, right? The older collections, medical, regular collections, and debt collectors, all of that, whether it's within a 2-year time, past the statute of limitations or not. So, a lot of people ask me, how will my credit consultant change? It looks like I'm going to have to start adding in older collections that normally would not be in the consultant price to get those deleted because FHA made those changes. And let me see, can I pull up the FHA website right now? You all got me on FICO 10. Debt income ratio. This is real impromptu, but I don't see it, but I will be ready for that. I will share that article with you, right? So the FHA does allow you to use 31% as it's stating of your income. And again, Facebook, you can't see the screen, but I'm sharing the article on my YouTube to income ratio buyers. But again, now 31% of your income towards the cost and 43% of housing expenses of long-term debt. So people, what that really means is not only will debt collectors, collections, monthly payments reporting be added into your FICO 10, if you're not aggressively paying down your student loans debt, meaning if you're only making a minimal payment and the balance is not really budgeting, which we all know that student loan debt balance doesn't really move if you're paying a minimal payment because of the interest rate. It's calculated on daily interest rates, right? Not yearly. It's not simple interest like credit cards, right? And also, did you all know that Forbes just released an article that credit card debts are being paid down? So for all my Dave Ramsey fans, let me see, can I find it? That article. This is to you, who people that hate credit cards, Fords, and credit card debts have been paid down more. I don't know if I can, let me just Google it. Within the last 2 months. And I think that's because that people just haven't had anywhere to go. They've had more money, but I prefer that you pay down essential bills and debt first versus, let me see, can I find this article on Forbes? The credit card. I prefer if you are credit card debt pay down. Put that towards your essential bills and kind of stack up for the future to make sure that you have. I can't find it, or I didn't have it, but that's just impromptu. Make sure that you have your living residence. Also, Antonio, if you're still on, hey, Keith Dixon from Facebook. Hello, Keith. Antonio, did you get those text messages about the home-based business this morning that I sent you all out? Really coaching people of how to build their home-based business, letting people know that FICO 10 is already here. So now more than ever, with the announcement that we are officially, they announced that we've been in a recession since February. And I'm gonna stop saying we, because I'm not gonna be in a recession, right? I'm gonna be cash flowing the most, but other people will be in a recession. And the official announcement that United States have been in a recession since February, right? Then people credit scores are dropping. Mine is increasing, right? But other people are dropping. And now more than ever, they're going to look for credit just to live off of. And they're going to need credit restoration services, and they're going to need cash flow taxes like I'm sharing with, and strategies like I'm sharing with you today. If this only available for sole proprietorship category only when setting up a home-based business. Yes, it is. And I really like that part about it because it's least expensive, right? I think like in Texas, it's maybe $500 to set up an LLC or a corporation. It's really least expensive than setting up a corporation, a LLC, and things of that nature. And it's the only way to pay your children to work within the business. So you get that $12,400 and your spouse, in a sense, and your home office space, your living space. So, hey, you all join me later on in a couple of hours. I'm going to discuss cash flow and how to use your credit to get more of it. So give me between 8 o'clock, I'm on Central Standard Time, and 9 o'clock. It may be 9 o'clock because I'm on my way to the gym. There are proper tax deductions. I'm still getting questions to set us, but home-based business give you $475. And the home-based business that I'm affiliated with is the only home-based business that can give you those tax deductions. Let me show you this website. They can give you those tax deductions. And let me pause this right here. This is if you just get customers. Give you those tax deductions and give you more money out of your paycheck. See, what other businesses can't help you do and won't help you do and don't understand how to do is to adjust your paycheck. So when you get the $475 tax deduction, you're getting more money out of your paycheck, and you can get more money in tax return at the end of the year at the same time. At the same time. So this is just if you get customers, right? But you want to get other people who wants to build a business with you. You get $40 per customer. Let's say there's just some people who want to get their credit repaired. They pay $80 a month. You get 50% of that profit. And then after you get the fourth customer, you get $10 in residual income. That's just two ways to get paid, right? Other ways to get paid is out of your paycheck or other people's paycheck. Maybe their hours have been cut from work. Maybe they've been furloughed. They need to get that money back from their hours being reduced, right? So they get that I call the W4 wealth strategy, the paycheck checkup. And once you enroll people to do the business with you, right, then you also, this is the W4 wealth strategy, right? You also get daily pay or daily residual income. Let me show you all what my, I'm having a goal to increase my daily pay, but it's just a different feeling. I don't know if I can pull it up. That all you have to do to get paid is wake up every day and it works like clockwork. All right, so this is how, if you want the home-based business to get it, text, and I'm gonna tell you what to text, so you don't have to feel like I'm texting too much. I'm gonna tell you exactly what to text to me directly. 601-720-2063. I want you to text I'm ready, and text I'm ready to 601-720-2063. That's 601-720-2063. Text I'm ready. You want more information about getting this home-based business, get more money out of your paycheck, or people you know and who you don't know who don't need more money out of their paycheck if they're still blessed enough to have a job, right? But maybe their hours have been reduced. Essential pay workers' pay has, come back to their same regular pay, and they feel like they're working on a lot of hours and they're not seeing a lot of it out of their paychecks, right? You help them get started. Now understand now that you can only get the money out of your paycheck by being a financial director, by enrolling to do the business, right? You can't be a customer and get more money out of your paycheck because you have to have the business tax deductions. So you can't be a customer and just pay $80 a month. Customers don't get paid. Some people say, hey, I just want my credit fixed. And that's fine. If you just want your credit fixed at $80 a month, you can text me too. 601 and just put credit fixed. But if you want to earn money, if you want to be the business owner, and also know with the credit fix program, you're not going to have me personally work on your credit, right? And so, all right, somebody from the 504 just text me and said they're ready. So let me get to the gym. I will see you all in a couple of hours. We're going to discuss cash flow, how to put more monies into your pocket versus it being taken away from your pocket. This is the queen of credit to your health and wealth, your peace and prosperity, and your credit and your cash flow. I got another text. I'm ready. Queen of credit out. See you all in a couple of hours.